Hey, what's going on, everyone? It's Keith Bolognese here again, and I'm here again with Brandon Bialkowski from Bison Ventures. And like we said a few weeks ago, we're going to try to do these every few weeks. Go over the Fed, the stock market, interest rates, luxury housing, bank failures, because we've got a few of those that have gone on over the last few months now since March. So Brandon, good to see you again, my man. How's everything going?
Awesome, man. Thanks for having me. Market's changing pretty quickly over here, so it's very interesting times.
It sure is now. So why don't you give us a little bit about what went on this week? We've got the Federal Reserve came out on Wednesday and they raised interest rates again, another quarter of a point. Do you think they're going to raise more? I personally don't think they are, but what are you seeing over on your side of the market?
Yeah, I don't anticipate them to raise another quarter. I think they pause the rest of the year. This has been, I mean, they've raised the quickest and the most over the span of a year in the last 40 years. So I think they've personally done enough to kind of alleviate a lot of the inflation pressure that we're seeing. So if I had to guess, I would say that they will pause on these rate hikes for the rest of the year, kind of see how inflation shakes out. As we know, and we've been talking about for 3 to 4 months now, that May 10th inflation CPI reading should have that shelter component come in. It's been lagging. So we're hopeful of that. We have seen the market react pretty favorably this week towards mortgage rates. So we've seen a good little swing downwards, which has helped some of the demand.
Yeah, and speaking of, the Federal Reserve raising rates, they've gone from, 0 to 5 to 5.25 now in just a little over a year. So
Mhm.
I know it's been 40 years since they've raised that large of an amount at 5%, but from a magnitude perspective, back with Volcker and Arthur Burns, they were raising from a higher interest rate. So the magnitude from 0 to 5% is much larger, and we're seeing the effects of that now with Silicon Valley Bank and now First Republic Bank is now a part of JP Morgan. And
Mhm.
we're also seeing other banks like Western Alliance, PacWest, and there's a few others out there, Ally Financial as well. Are you seeing, with all this happening, are you seeing like lending standards tighten up even more, or what are you seeing? Because you were seeing so many people. Like if you look at the M2 money supply, it's just like falling off a cliff. Everybody's taking their money and they're moving it into money market funds. And now you've got Apple Computer, which has a banking division now, and they're offering 4.15% to just park money there as well. So what are you seeing on
Yeah.
the lending side? Are you seeing that tightening up at all?
Yeah, we are seeing it tighten up a little bit in the jumbo market. So from an interest rate perspective, it's been very interesting. Generally speaking, in a normalized market, jumbo rates tend to be slightly higher than conventional rates. We haven't seen that be the case in the last uh, 12 months. So jumbo rates got their spread was as much as a percent lower than conventional conforming rates. We've seen that gap shrink pretty substantially as some of this regional bank failure has gone on. I think there's a lot more credit tightening and a less of an appetite for some of these investors on the back end for these jumbo loans. So we have seen jumbo rates become about the same as conforming conventional rates. I do anticipate there may be some more credit tightening from some of our investors that we have. But from an overall perspective in the conforming market, our lending standards are already very tight. So it's if they were to tighten them anymore, it would restrict home buyers. And I think part of what the current president's trying to do is allow affordable homeowners to get into homes that couldn't afford them previously. So if they tighten those credit standards, I think that would hinder a lot of
Yeah.
people.
Now it's funny that you bring that up. I've been seeing these articles now, and I know you brought it up to us back 4 or 5 months ago about you've got a great credit score, a 740 credit score, and your rate's going to be higher than someone who has a bad credit score. Like, can you kind of clarify exactly what that really means, though? Because it probably
Yeah,
is a little bit misleading if I had to guess.
super misleading. There's a lot of media headlines right now that are misleading. There always is, but that one grabbed the attention of a lot of people, and there's a lot of misconception around that. So there's always been pricing adjustments associated with mortgages. Now, what they did is they're making it slightly more affordable for people with lower credit, and by taking a little bit more in a pricing adjustment for people with higher credit. Now, if you have a high credit score, you're still going to get the best rate,
Right.
no
Okay.
matter what. Even if you're putting 20% down where you're getting hit the most on a pricing adjustment, there's always been pricing adjustments. You just have slightly higher pricing adjustment. Now, as a home buyer and a consumer, you're not seeing these pricing adjustments. We only see them on our end. So if I were to just show you raw rates on credit scores, they're still going to be tiered. The highest credit score borrowers are going to get the best rates. The lowest credit score borrowers are going to get worse rates. It's nothing's changed in that regard. I think there was a lot of people that that saw that article and were like, okay, then it just doesn't make sense for me to keep a high credit score. I'll lower my credit score so I get a better rate. That's just not the case. So a lot of misconception around that, and I think the more education we can provide our clients with that, the better off they're going to be, because there's media headlines all over the place that are wrong right now.
Yeah. And how are you? I mean, I know what we're seeing on our side from a luxury perspective as far as demand is concerned. And obviously supply is super tight still.
Mm-hmm.
You know, I was reading the Cromford report, had some bullet points the other day talking about how supply is significantly lower, listings on the contract are higher, sales are up sharply, days on market's now coming down again, average and median pricing is up, and like the listing success rate is up as well. You're seeing a higher percentage of final sale prices, you know, in that 99% of list now again. So what are you seeing on the buyer demand side on your end? And then I'll kind of maybe go into like what we're seeing on the luxury side of things.
Yeah. So generally speaking, buyer demand, I would say six or seven of the last 8 weeks is up. And a lot of that's due to interest rate. So just depending on the media and how they're portraying interest rates at the time, I think last week buyer demand actually was down because the media outlined that rates had gone up a little bit. So overall, I think buyer demand has gone up. The amount of buyers going under contract in general is up. I believe when we were looking at that Cromford index, buyer demand is almost back to normal levels.
Yeah.
So in previous months, it was 20-30% below normal levels. So that's slowly ticked up, and obviously the amount of listings has not. So the supply hasn't gone up. It's actually gone down a little bit. So it'll be a very interesting summer, because generally speaking, we have seasonal. We're very seasonal here in Arizona. So not a lot of transactions go on during the summer. But I think that, and as kind of Tina with the Cromford report was talking about, there may not be a seasonality this year. And I know I've been saying that a bunch.
Yeah. Yeah. And, you know, on our end, the luxury side of things, we're still seeing those, you know, those buyers are out there for sure. And it's funny, on April 1st, I don't know if many people know about this, but because we've got a ton of buyers that come from the California market. And in Los Angeles, they implemented what's called a ULA tax now. So if you own a home that's between $5 to $10 million that you're looking to sell, starting April 1st, so it's been in effect for a little over a month now, you're paying a 4% tax on top of all the other fees, commissions for real estate agents and so on and so forth, closing costs. So it's 4% between 5 and 10 million. But if you have a house and there's a lot of homes in California that are between 5 and
Yeah.
10, and there's a lot of homes that are over 10 million. So over the 10 million threshold, you're paying a 5.5% tax on top of everything. So I think,
Crazy.
you know, from the luxury side of things, we are starting to get more phone calls now from people that are living in Los Angeles. It's you know, with the state tax, income tax there, it's, you know, between New York and California, you've got the two highest tax states in the country, right? So Arizona here, we're at that 2.5% flat tax, but that started this year in January. And yeah, so we're starting to see a lot of that, a lot of those luxury buyers from LA starting to make phone calls over the last month, and we're seeing a lot of homes going to the contract in that, you know, $5 to $15 million range. So yeah, it's been busy. North Scottsdale has been great, and so has been Paradise Valley as well. So
Paradise Valley's been up there on the heat map for a long time.
yeah,
It's always remained a relative seller's market, which is interesting because when the first time home buyer affordable homes were buyers markets or severe buyers markets, Paradise Valley remained fairly strong throughout all of that.
yeah. So, well, it's going to be an interesting summer. Brandon, thanks for taking the time today. If anybody out there needs any help getting pre-approved or has any questions on the interest rate market, feel free to reach out to us. You can, you know, we've got our email and our description and everything in there, our phone number as well. You can give us a call. We can contact you with Brandon. He's a part of our office over at the Scottsdale Quarter. And if you've got any questions regarding the housing market in general, just feel free to reach out to us as well. So hope this helped and hope you guys have a great day. Brandon, thanks so much for taking the time, my man.
Awesome. Thanks,
All
man.
right,
You too. Have a
all
good
right, take
weekend.
care. Bye-bye.